Welcome back to Lim's Cryptoverse. Today we're going to talk fast, and you could do the usual, like take a print screen and copy this data because I've got a lot to say. And so let's get started. So I'm only going to be focusing on the Treasury or the funding part of a blockchain. So what do I think it's important? I think it's one of the three, whatever points or legs of a three-legged stool, or like Vitalik blockchain's trilemma. It's one of the three most important factors: that social engagement, development, and of course, funding. These factors are what, in my opinion, cause a network effect of a blockchain. So what the heck is a treasury? I think we all know it, but I'm going to review it quickly. It's a pool of assets used to fund its, projects, expenses, things like that. And this is typical for corporate funding, but for cryptocurrency, digital asset project, it could also be what's called tokens and stable coins, things like that. So let's compare a blockchain project's treasury to a corporate treasury. So corporate treasuries tend to be centralized. And the hope for blockchain is that they're decentralized. Corporate treasuries are in US dollars. Blockchain treasuries are not in US dollars. They could be mixed. What else do we have here? Oh yeah, treasury instruments, they tend to be in money market, like mutual funds, things like that, in terms of corporate treasuries. And cash is usually to back up debt. So corporations rely on debt. Blockchain projects being that the tech and the small companies, or projects I should say, don't have much of any debt. And corporate treasuries are highly transparent and audited. So types of funding: there's primary funding, like an IPO in a corporation, or an ICO for a crypto project. There's secondary funding, just like you see with secondary stock sales. And of course, for crypto projects, there's inflation, meaning monetary printing. And then there's fees. There's money that come in. This is for crypto projects. There's money that come in from fees. Fee revenues. Of course, that could be burnt. And we all know about Ethereum burning of fees. And unlike corporations, some crypto projects receive a lot of their funding from donations. So this is one of the most important slides. I suggest you print it. I'm only going to focus on one or two or three factors here. So what are the characteristics of a cryptocurrency? I already mentioned, crypto treasury, I already mentioned them before. They're not centralized. The governance now is as good as a corporate governance, but they're moving towards a DAO, a decentralized autonomous organization. The funded denominations are usually in the native crypto coin. There's some reflexivity, meaning higher coin prices lead to higher funding, leading to more incentives, leading to more blockchain usage, which leads to higher coin price. You can think about that later, but the key, if you want to understand that, is that the funding is typically in their own tokens. That's why you get this reflexivity. What else should I focus on? Yeah, the assets usually held in a foundation, sometimes a for-profit entity. The funds might be used in DeFi. I mentioned they have no debt. There's low transparency typically. They tend to be volatile because they're in native coins. Think about that. If you're in a native coin, you're going to be extremely volatile. If you're in a money market treasury or a treasury instrument, so money market are basically short-term corporate debt. And if your treasury instrument, like a T-bill, obviously it's not going to be volatile. And security, they tend to be in multi-sig wallets because they're in decentralized wallets. Here's an example of a DAO, decentralized autonomous organization. There's issues about control, even though it's decentralized. There's issues about control. And Near Protocol, for example, is working on that. They're trying to figure out ways of making these DAOs more truly decentralized. And so there's no entity controlling the DAO. Slide number 8, the purpose of a blockchain, you could print this out, but I think it's pretty obvious. It's blockchain treasuries. Their purpose is to fund development, marketing, outreach, partnerships with other chains, grants like venture partnerships. I'm sorry, venture capital. I just saw that Solana has their own Solana Ventures, things like that. Incentives meaning like subsidizing dApps, for example. And sustainability, I don't mean ESG, I mean sustainability on the long-term success of the project. So sources of information, you can print this out. I'll just focus on one or two areas. The primary funding, like from an ICO, that's easy to find. Even secondary, it's pretty easy. And the fees are easy, right? You can go to Token Terminal and find the fees. But it's difficult to get updates on this stuff. I listed where you can obtain everything. Masari, you can go to blogs. I mentioned Token Terminal. But here's the issue. If you go to the last row, transparency, it's very easy to find at ICO proceeds. You can go to Crunchbase, for example, Root Data. You even go to DeFi Llama and find some of this information. But finding updates is very difficult. Now, one of the chains, that's one of the most popular chains. When I tell you, you're going to say, of course I know that chain. This chain is so popular. It's one of the biggest. And everyone says it's going to be one of the most successful chains. That's Solana. Well, guess what? There is no information on their treasury. Ever since November 2022, when FTX and Alameda Research went bust, there has been no information on how much funding Solana has. So that's really, really a red flag. Otherwise, I think Solana is a great chain, but all these chains have issues. So primary funding examples I mentioned before, you can go to Crypto Rank, which is below. I took a snapshot, and this is for the primary funding. But these, like Crunchbase, for example, these websites give you data on secondary funding. And there's also Root Data, there's DeFi Llama. Masari gives you information on this too, but not on ICO. It's more on the Treasury. Let's go to the next slide. So this one here, most recent Treasury data. So what's good about this example, and this is from DeepDAO, this is actually telling you literally the most recent size of the Treasury. So this is what you want. You want to know how much money they have now, not a year ago. And if you look on websites, blogs, even artificial intelligence, you go to ChatGPT, Perplexity, Grok, and there's another one, Gemini. You cannot find this data. So that's an issue. So here are some examples from specific projects. I'm only going to talk about two or three. Avalanche used to be big, but a lot of it's at the for-profit, so we don't know what's going on. I think the same thing is going on with Cardano. It might be, some of it might be in its for-profit entity at input-output. But the good thing is it's on-chain. So I believe that might be the foundation. Ethereum has 0.8 billion. I just found that out today. This is as of August 2024. And Ethereum, even if it didn't have anything, we don't need to worry about it because it has a large market cap. That's another thing to look out for. If the market cap is large, they can easily issue secondary coins. That's if there's no max limit, of course. Layer 2s, by the way, have the largest treasuries. Multiverse X is an example had a huge treasury of greater than $1 billion. It's all spent, no information on it. It's gone. I even went to their blog and I looked for it in multiple places. It's gone. So I wish they would update that because I think Multiverse is an excellent chain. It used to be called Elrond, and the ticker is EGLD, E-Gold. Near Protocol has one of the largest cryptocurrency, I should say one of the largest treasuries. And the great thing about Near Protocol, it has done a great job at diversifying its funding. So it's not just cryptocurrency, it's even in fiat like US dollars, and it's in stablecoins. So that's really good. And Solana, I mentioned before, there is no information on Solana, but they are getting fees. And Polkadot's an example where they had a very large funding and it's on chain, so you could see what it is, but it's gone down dramatically. I still like Polkadot a lot, but I'm really worried about its treasury because it's in the DAO, and because it's in the DAO, Gavin Wood can control it, and he can't restrict it. He can't restrict all the funding flows. I should say flows that are going out of the Treasury. So I think they're spending too much money. So we need to monitor Polkadot. What my final thoughts are, I'm sorry I spoke too quickly, but there's a lot to say, and I think it's better for you to sit down and go over it line by line. And I didn't want to bore you with this because this is not the most exciting content, right, for anyone. Even if, who should I say, Vitalik spoke about this, it still wouldn't be the most exciting thing. So what are my final thoughts? Well, I didn't mention earlier, but I like a holistic approach. And here's what I would do. Get all the quantitative data on the whole blockchain, not just on the Treasury, on everything. And then get the funding data, see where it's denominated, what it's used for. Is it going down quickly like Polkadot? Determine, this is very important, determine if it makes sense, because a lot of these fundings and treasuries, I should say, have gone down rapidly, like Solana, Polkadot, even Near, they're going down rapidly, but they don't need any funding anymore as much as they did before because the blockchain's already developed. Because a lot of the funding after that is going to be at the layer two, not the layer twos, at the DApp layer. You understand what I'm saying? The funding initially has to be at the layer zero layer, like Avalanche, Cosmos, Polkadot, or layer one, Solana, Near Protocol, whatever, Multiverse X, Phantom. They need that operating system, if you want to call it, or rails like tracks to be developed. And once those layer zeros and layer ones are developed, then the dApps could get their own funding and provide whatever funding that they need. I'm not sure if hopefully that's clear. I'm not sure if that's clear. So what I was talking about today was only funding at the layer 0 and layer 1 level. Hopefully the dApps can get enough funding to help sustain the viability of the layer 1 and layer 0 chain, as well as their own app. So who's controlling it? We talked about that. Make sure it's not too decentralized, because if it's too decentralized or there's someone controlling it, either way it's bad. You don't want the money disappearing. If they're centralized and someone's controlling it, you don't want them to be spending the money. And vice versa. If it's DAO, you want a DAO, but you don't want everyone in the DAO voting to spend all the money. Lastly, determine if the treasury is large enough to fund operations for the next 2-3 years, depending on the stage of its life cycle. So I already talked to you about whether or not it's layer 0, layer 1, or it's a DApp. And of course, the life cycle is important. If the blockchain is already complete and it's in beta phase or coming out of beta phase, as is Solana, for example, Near, they don't need much money. Well, I hope you all enjoyed this. And if you want more information, check out all the websites that I mentioned in this presentation. Have a look at the presentation again. And I was going to say go online and you could find information on this, but actually there is very little information on Treasury funding. But what you could do is check out the blogs. I think that's, if you focus on one chain, that's the best place to look. If you just want to know in general, what's the size of a treasury or how have they been coming down, check out the websites that I gave, but they don't have all the blockchains. That's an issue I forgot to tell you about. Not all the blockchains are listed on these websites. Well, thank you very much. And don't forget to